There's concern in China about the economy. To put it mildly, the stock market's fallen almost 30% since last month.
Steph is looking at why it matters to us. Morning.
Yes, morning to you both. It's a really big story what's going on in China in terms of the global economy. Good morning, everyone. Yeah, China is the world's second largest economy, and it's a country that supports our trade here in lots of different ways. But there are problems there, which is best illustrated by looking at the stock market, which of course represents the value of their top companies there. You can see behind me the share price had been going up, but then in June things took a turn, and since then almost 30% has been wiped off the value of their top companies. That's the equivalent of over £1 trillion. That's a lot of zeros, and it's not far off Britain's entire national debt. Well, joining me now is James Igoe, who is a stockbroker. Good morning to you, James.
Morning.
So just explain what's been happening in China then.
Sure. OK, so you've got a stock market that most of the world looks at that's rallied up about 150% from its lows. In the last 3 or 4 months, that's come off by almost 30%, which is pretty significant. So one of the concerns is that it went up too quickly, and everything that goes up too quickly in our world tends to come down eventually. So what we've been trying to understand is how that's happened, why it's happened, and what's been done about it. Really, some of the commentators seem to suggest that the bottom isn't here yet. So from a speculator's point of view, somebody looking at the market, it's pretty fascinating at the moment.
Bill and I were talking earlier about whether this is a correction. That 30% drop is a massive correction if it is one.
Yeah, you've got to look at it in context. So from the beginning of the year to where we are now, market's still up by around about 10%. So in those terms, it actually outstrips what we've done. One of the concerns, one of the I guess layers that you'd have to draw from is that about 85% of the Chinese stock market is made up by retail investors. You and I having a bet on what goes on in China. That is quite different from a mature market like the UK, where the majority of volume is made up by institutions like banks who bet on other people's portfolios, and the difference is that the lack of experience means that there's a heck of a lot more volatility in China. So people speculate that things are going to go up very quickly. They also get very frantic when things don't start to work out for them, and that's one of the reasons behind the volatility.
So why does it matter to us here in the UK, do you think?
It's an interesting question. Part of the way that the Chinese market works for us from the outside looking in is that it's a beacon for global growth. We look at the GDP figures coming out of China because we feel that if China works, the rest of the world will work. In terms of the stock market, there's actually very few companies that raise money through the Chinese stock market. So what's going on at the moment is more of an impact to individuals that are invested in China as opposed to companies, and you'll see that in our market, in the US market, for instance. We've had relatively very low levels of volatility as compared to China during that same period, which is probably one piece of anecdotal evidence for that.
So it's worth watching. James, thank you very much for your time this morning. That's it for me.
Steph, thank you.